seeking a profit. What about a profit before expiration? You may find that a bear put spread may theoretically be worth its maximum value in advance of expiration. This might occur if both puts are deep in the money and are trading for their intrinsic values. Whether before or at expiration, if your initial objective was to sell the spread for a profit, then you might do so whenever you can receive its maximum value or the difference between the strike prices. If it looks as if a bear put spread is going to expire in the money with a stock price below the lower strike price, then you might choose to let the exercise and assignment process generate the maximum profit. Note that early assignment on the short put of any bear put spread can result in the maximum profit as well. We would like to thank you for taking the time to watch the videos that we have put together for you today. Take a look and subscribe to our YouTube channel, our Instagram, our Facebook page, and reach out if you have additional questions. We would love to hear from you. Check out our website for more information. Go to www.optiontradersnetwork.com. Thanks so much.